Monetary policy is vital in addressing inflation and unemployment aspects and to achieve price stability of a country. Given the foresight, we'll be discussing on monetary policy and its operations. Monetary policy is the process by which the central bank influences the cost or the interest and availability of money, known as money supply or liquidity, with a view to attaining price stability. In Sri Lanka, the authority responsible for the formulation and implementation of monetary policy is the central bank. The Monetary Board is the monetary policy decision-making body in Sri Lanka. The Monetary Policy Committee, known as MPC of CBSL, chaired by the governor, is responsible for providing monetary policy recommendations to the Monetary Board. The primary function of the MPC is to evaluate emerging monetary and macroeconomic developments and make recommendations on the appropriate stance of monetary policy for the consideration of the Monetary Board. In recent times, central bank conducted monetary policy in line with the flexible inflation targeting, known as FIT framework, aiming at stabilizing inflation at desired levels over the medium term while supporting economic growth to reach its potential. Monetary policy conducted under flexible inflation targeting framework is aimed at stabilizing inflation around the inflation target while minimizing disturbance to the real economy. In terms of operational aspects of this framework, the central bank uses its policy instruments to guide short-term interest rates, particularly the average weighted call money rate, known as AWCMR, as the operating target. CBSL possesses a wide range of tools to be used as instruments of monetary policy. The main instruments are the policy interest rate and open market operations, known as OMS, and the statutory reserve requirement, SRR. In addition, bank rate, refinance facilities, quantitative restrictions on credit, ceilings on interest rates, and moral suasion can also be used. CBSL has the independence of choosing appropriate instruments to conduct monetary policy. Standing deposit facility rate, known as SDFR, and standing lending facility rate, known as SLFR, are the key policy interest rates of the CBSL. They were previously known as the repurchase rate and the reverse repurchase rate of central bank, respectively. SDFR is the floor rate or the minimum rate for the absorption of overnight excess liquidity from the banking system by CBSL. With effect from 1st of February 2014, standing deposit facility of the central bank is uncollateralized. Standing lending facility rate is the ceiling rate or the maximum rate for the injection of overnight liquidity to the banking system by central bank. SDFR and SLFR form the standing rate corridor, which is also known as the policy rate corridor. SDFR is the lower limit and SLFR is the upper limit of this corridor. Changes of these floor rates and ceiling rate indicate changes in the monetary policy stance of central bank. Standing rate corridor limits the possibility of large fluctuations in the short-term market interest rates, and helps to maintain average weighted call money market rate at appropriate levels, which is the current operating target of the monetary policy. Open market operations, or OMOs, are the market-based monetary policy operations conducted by central bank using acceptable securities to maintain market liquidity at appropriate levels in line with the monetary policy stance of central bank. CBSL can use government securities and the CBSL's own securities for this purpose. Monetary Policy Consultative Committee, or MPCC, consists of a cross-section of stakeholders, including professionals, academics, and the private sector personnel. This committee of external professionals provides views of the private sector on the monetary policy stance and macroeconomic developments to be used in monetary policy decision-making process. Main definitions of monetary aggregates used in Sri Lanka are as follows. Reserve money, or monetary base, and also known as high-powered money, includes currency outstanding, the currency held by the public and currency with commercial banks, and commercial banks deposit with the central bank and government agencies deposit with central bank. Narrow money, or M1, includes currency held by the public and demand deposits held by the public with commercial banks. Broad money, M2, includes narrow money supply and the time and savings deposits held by the public with commercial banks. Broad money, M2B, includes narrow money supply, time and savings deposits held by the public with commercial banks, and also includes a part of foreign currency deposits of commercial banks. Broad money, M4, includes broad money supply, M2B, and time and savings deposits held by licensed specialized bank and licensed finance companies. Reference for today's presentation is from Central Bank's web page titled as Monetary Policy. Thanks for watching.